And now, as we speak, this V-shaped recovery is a bull market sign. And in my opinion, from now on, we'll see new all-time highs, so that would be 110K and higher, followed by more monthly close all-time highs. In my opinion, this is the bull market building, so the last phase of the bull market, the FOMO phase, is about to happen, and we might see a very nice 2025 after all.
Today, Bitcoin bulls Plan B and financial analyst Tom Lee share their latest insights and predictions for the crypto market, focusing on the weeks ahead and what 2025 may bring. Drawing from historical patterns that track Bitcoin's price action after previous halvings, especially in the wake of multiple all-time highs, both experts are confident that this year marks the beginning of a historic shift. They predict a staggering $400 trillion influx of capital into Bitcoin, setting the stage for an unprecedented surge. Currently, Bitcoin is trading just above $12,000, reflecting nearly a 20% increase in the past month alone. Despite recent volatility, Plan B and Lee believe we're on the verge of witnessing one of the most significant price rallies since Bitcoin's inception. As we move further into the cycle, the story intensifies, especially heading into 2025. The introduction of Bitcoin ETFs has opened the floodgates for institutional adoption, with thousands of firms across the US now allocating capital into the leading digital asset. This growing demand has created an extreme supply-demand imbalance, one the market has never seen before. As a result, both analysts believe we are on the brink of a major transformation in the crypto space. In their latest interview, Plan B and Tom Lee break down what investors should expect in the coming days and weeks, and why they believe everything is about to change. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Bitcoin jumped from 82K end of March to 94K end of April. But we're only 1 year in. Only 1 year into the cycle and 3 years to go. Fundamentals are very good. Bitcoin is 2 times as scarce as gold, but gold is 10 times more worth than Bitcoin. So Bitcoin remains super undervalued. But I remain bullish. Why is that? Mainly because of this chart, the market cycle chart. And I made it in 2022 after Bitcoin missed the 100K in 2021, and I was late recognizing the bear market in 2022. So this market cycle model is an on-chain model. It's based on analysis of all the on-chain transactions of Bitcoin. There was no yellow in March. There was red, bull. So I knew that although it's a very weird, long, flat bull market, that the bull would continue. And in my opinion, from now on, we'll see new all-time highs, so that would be 110K and higher, followed by more monthly close all-time highs. Usually those all-time highs, they're not alone, they come in groups. The 2-year realized price, more of a medium-term indicator. I find it very useful. It's up from 75 to 77,000, and the 5-month realized price, the short-term buyers, is 92 right now. It's up from 91 last month. And Bitcoin, the red dot, is above them all. So all the realized prices are going up again, up, 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 and the Bitcoin price is above all the realized prices. Well, that's how we want to see it. That's also a sign of a bull market. So everybody's in profit. There's not much pain in the market. We'll see what that brings. Now, if we combine them all, and I like this chart, it can be confusing, but it gives very nice situational awareness. If we go from low to high, we see this moving average again, 200-week moving average at 47. This can be seen as a bottom, a floor in bear markets. Because every time there was a bear market in 2015, in 2018, it bounced off that 200-week moving average. And the 2022 bear market was a bit extreme, so it dipped a little bit under, below the 200-week moving average. But still, it's a very good indication of what the next bear market bottom could be. Now, the next one, the 2-year realized price at 77K, can be seen as a bull market floor. So when Bitcoin drops below that gray line, then the bull market ends. And here too, when it drops below that gray line, the bull market ends. And here too in 2014. So we're now above that gray line. So the bull market continues, in my opinion. But let's say 4 80 plus RSI months, that would bring us to Bitcoin to $400,000. Now, then that's not far away from the stock to flow 500,000 average, which can be seen as a target based on fundamentals, scarcity fundamentals.
Plan B emphasizes that crypto is experiencing the fastest adoption rate of any investable asset in human history. He projects that by the end of 2025, there will be 1.1 billion active crypto wallets, a staggering figure that highlights the unprecedented speed of global adoption. This explosive growth, he argues, will lead to the fastest accumulation of wealth the world has ever seen. Drawing on decades of research, Plan B concludes that all data and charts point to one undeniable truth: liquidity drives markets, and crypto is positioned to outperform every other asset class. This belief is not based on speculation but on a comprehensive analysis of macroeconomic trends and historical patterns. For months, he's been urging investors to prepare, noting that the stars are aligning for an explosive phase in the crypto market. According to Plan B, we are now entering a period marked by parabolic price movements, a cycle that will reward those who understand the magnitude of what's coming.
The high-yield market never confirmed the panic that we were seeing from the economists about the economy. High-yield spreads did widen to like 439 basis points wide, but if we were barreling into a recession, they'd get to 700 or so, and they're back down to like 360. The second is that the stock market did have a liquidation event, as you point out, but waterfall declines, all of them, 17 out of 18 since 1950, had a V-shaped recovery. So we knew that whenever the bottom was established, the bottom would be a V-shape. 2022 was the only real exception because of Jackson Hole. And the third is we had a lot of faith in businesses. You know, these companies have been battle tested. They survived a pandemic shutdown. They survived a bullwhip effect from a recovery. They survived the fastest rate hikes in history. So I think that businesses really should get credit, and they've delivered earnings even for Q1 and for guidance that have been way better given the Armageddon that we expected. So I think those three things are the reasons we sort of told our clients to kind of buckle down and even add exposure. We were highlighting it during the tariff dislocation, but we know that the equity professional universe of investors, you know, looking at political surveys, more than 60% are Democratic leaning. So their interpretation of the actions of the White House was half empty. So we saw an exaggerated move in equities relative to the bond market, where in the bond market it actually is flipped. In the fixed income world, 60% of bond managers are registered Republicans. And so that's why I think you get better signal, at least in this instance, from what the bond market was doing. And the second is, of course, something people have talked about is the 10 best days. You know, we were highlighting this multiple times that if you exclude the 10 best days of 2023 or the 10 best days of 2024, the S&P only returned 3% a year each of those years. So you needed to stay in the market, as you point out, in order to get the 20% gains. And I think this year is another example of people rage sold at 48.35 and now they're buying in today. They missed 1,000 points or 20 percentage points of a gain in 2025. Right now, the 10-year yield at 4%, I think isn't a huge burden for not only for the government, but also for the economy or for companies. So I think it's a level of funding that businesses can earn a return on capital. And then as we think about 2026, there's a lot to be excited about. We have deregulation coming. We have the tariff debacle behind us. We have tax cuts possibly, and then we might have better trade partnerships with other countries, meaning U.S. companies have earnings upside. I think that the market is flat year to date through May, so I don't think anyone should feel like they missed anything. I think that they're going to have a chance to buy a lot of companies. A lot of stocks got obliterated, and I think that these washed out names are still opportunities. And we talk about it with our clients, whether it's Tesla or the Mag 7 or the small caps, there's many opportunities still.
Tom Lee challenges traditional economic indicators, arguing that key metrics like labor data and inflation are often manipulated to fit specific narrative. He suggests that this distortion conceals the real health of the economy. In contrast, the growing acceptance of Bitcoin by governments, institutions, and mainstream media signals a deeper recognition of its intrinsic value. According to Lee, this is just the beginning of Bitcoin's journey. What started as a fringe asset has now become a major financial force, especially with the rise of Bitcoin ETFs drawing widespread investor interest. Lee emphasizes that spot ETFs are a game changer in the financial system, allowing large corporations like Apple, Amazon, and Google to accumulate Bitcoin quickly and efficiently. These tech giants, with their decades-old institutional relationships, can bypass the traditional complexities of purchasing crypto directly. This streamlined access through ETFs gives them a major advantage, reflecting how digital assets are transforming the financial landscape at a foundational level. In support of Lee's outlook, Michael Saylor adds that the accelerating shift in the economic environment makes it crucial for investors to embrace digital currencies. He urges people to see Bitcoin not just as a hedge, but as a critical tool for building long-term financial security. As the world moves deeper into this digital era, both Lee and Saylor believe that Bitcoin's role in shaping the future of investing is only going to grow. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.